All right, good morning. Could this be the turn? I wish I knew. Anyway, we look at the charts, and as I said yesterday, the uncertainty created by all this news just led to more uncertainty yesterday, where, while we see a nicely reversal bar here on the futures, but it doesn't look so powerful when we look at the S&Ps, the spiders, which we'll take a look at. In any event, markets buyers stepped up at these lows and protected from falling down over the cliff down lower and getting past the middle of the range here. This is where things are right now, but it's coming close to this price resistance area where it'll be more difficult for buyers to start to push it up, because those that bought up here in anticipation of the breakout before getting blindsided, you remember last week, blindsided with the China news, and then the president coming out and saying, oh, really? Let's get it on. And down it went. And buyers said, this is the picture of saying, you know what, as bad as that sounds, we really don't believe you. And so they bought it again, and yesterday was just a grind sideways, and today we're pushing up closer to this resistance area. And we're going to see if we can really get it going up to the top of the range here. As a subjective reference point, the 20 MA is there, simple period 20 moving average, which I guess will come into play just because the majority look at it as a reference point on the chart. So we'll see. It's not really in alignment with much, but it is alignment with a whole number as I'm looking at that, right? And that's where it's pushing into right there at 2,900. And that's where the second breakdown occurred. So if you remember, pre-market, China came out with the news of their tariffs. Market dropped into this support area there. And then it spent about a half an hour stabilizing. And as it rallied up to the down point, the president came out with his tweet and sent the markets careening lower down to that next support level where the whole process started again. And we've just got this trading range that's going on here, back and forth, back and forth. So 1 second, guys. Dan is, I don't know. So let's look at other markets and see what the story is there. As I mentioned, the markets have been kind of working in lockstep with each other, pretty much with similar patterns, similar, support and resistance levels. So I don't expect that that's going to change here, but let's take a look. Just on the weekly chart, it does look like, well, today's Tuesday, the beginning of Tuesday. Like, could this be the turn? If we can get a green day that closes up here, that's going to suggest moving higher. We've got the whole week to go, and a red bar, I think at this point would be a pretty strong signal that things are going to go down, but we'll see what happens by the end of the week. Looking at the NQs, same story. It's actually poking its head up against the 20 MA there, green bar coming into the breakdown area. Same old story there. YM, same thing, 20 MA, sideways consolidation, big nasty red bars down, grind up, and that was the big gap down and reversal. So it's in a trading range. I guess the takeaway here is don't expect too much. Still a day trader's market for the most part. And we'll see what happens as you reach this line in the sand here where prices broke down through on the Trump tweet and what buyers and sellers want to do at that reference point. The Russell was the weaker. It's got a little bit more room to run up. That's pretty attractive looking on a weekly time frame, whether this actually sets up like this at the end of the week. But I would like that as a counter trend trade, and you got to really look at this. I don't have enough data here, but we could look at the Russell. This really doesn't look like that at all. The ETF, we got this big red bar here. So all the question is whether this can move deeper into this resistance area and actually hold on to it. So, Frank, you've never seen a mess like that on a daily chart? Well, I probably have. I've been doing this a lot of years. Back when, and it's a completely different time, but after the bear market that started in 2000, as we went into 2001 or two, there was a lot of choppy price action. It wasn't pleasant at all, as this isn't pleasant. But really to recognize that is a huge plus, because I can assure you that there's a lot of people that are just getting torn to pieces in this market. And when you see a picture like this, the takeaway is don't trade it. Go find a new picture. So back in 2001, 2, I forget exactly, maybe it was at the beginning of 2003. 2003, the markets took off to the upside, but probably 2002, where things were just beaten down so severely. Decimalization was in full effect. If you guys aren't around that long, stocks used to trade in fractions. And then when it changed to decimals, that just added to the fact that things didn't move anymore. And then the technology moved to being able to split the penny with trading inside the pennies on a level 2. So things just didn't move. And that's when I started trading futures, did that for several years. And then the futures kind of went into this kind of dead, low volatility thing, and volatility is starting to come back. So we're starting to do that a lot more now. But the thing is to recognize what is, especially as an active trader. Recognize what is, and don't bang your head against the wall. Right? Don't dig a ditch if you can get an air conditioned job, so to speak. So this is kind of like, this chop is like digging a ditch to try and make money versus, a cushion kind of job where things are trending and you buy support after reversal and so on. So in any event, let's see what else is moving. And oil, it's up here a little bit. It's just kind of a mess here. It's near support. It's rolled over. Is it going to come down to this level again? I don't know. So stay away. Bonds are up here pretty good. And so makes me think, why are equities up here? So the thinking here, what bonds up, interest rates are moving lower, which brings in the yield curve fear. Which I've never seen, where the yield curve inverts intraday and that gets the markets ruffled. That's a new one for me. Whereas many years ago when it happened, I guess around 2008 or 7, and then back in 2000, no one talked about it. Right? And so now things have evolved to the point where an intraday inversion gets the market's attention. And so bonds are up here. They're against a topping tail. Is this an M, or is this just a resumption in this uptrend here to go higher? So this is something to keep an eye on to see if bonds keep pushing higher. And if you don't have bonds, you can watch TLT to see, you can see it's moving up here. If that continues, and this is, a 1, 2, 3 continuation pattern. So it doesn't have, the same fluid movement as the bonds, since, this gaps where the bonds are trading after hours. But, you can watch TLT or TBT to see if it's going down. So, it's invert and you can see that's going. So I'd be a little skeptical here of these markets that are up and coming up into price resistance where bonds are pushing higher. If those bonds keep pushing up, if we're going to rely on the correlation of what has been, equities are going to go down. So let's keep an eye on that. Gold, had a topping tail, but not going much here. It's in a great, beautiful strong uptrend. It consolidates sideways versus pulling back. That's bullish, and expectation is it'll continue to go higher. Silver, that's kind of a surprise because look at this. Look how bullish that is. It just cleared this resistance. And yeah, it did consolidate a while in that up, but it just went through that. So that's really a sign of buyers in control. And it's like, well, who cares? This is bullish and it's going to go higher. And they just pushed it up through after some consolidation there. So that looks great. Just curious. Euro here. Boy, that's big reversal day last week. And this is, going to be interesting if this breaks here under that level. And I just kind of poke that. Don't take that number as being like something to rely on as a trigger. I just put it there. But you can see the grinding downtrend in the euro here. So breaking below that, there's an unfilled gap down here. It may go significantly lower. So set an alert. Keep an eye on it. And you can use, if you don't have that, futures, you can use this ETF and just set an alert down there to see if it actually does break. Transports, it's been the weaker. It's sitting on this support here. So the message is the same across the board for equities. It's kind of a wait and see within this trading range as to which way things are going to go here. Would I buy silver now? I guess with a giant stop, trader. I don't buy things that aren't either creating support or pulling back the support. So no, in no way would I buy silver here, not even on an intraday basis. If I was looking at this, and maybe I should have, I would have certainly considered buying a breakout, because that's a beautiful breakout pattern where it attempted to go down and sideways. The 20 MA is hugging it right underneath there, topping tails with no follow through. And that green bar right there is the, hey, this is it. Beautiful pattern, one to print out and put in your pattern book of multiple time frames. And so while the daily is up, or was up 2 days and up a bit already, that is a fantastic intraday base for a breakout. And Dan and I did a late day breakout MT live some time ago. And I know this isn't late day, but it's the pattern is the focus. And, so this consolidated, developed for a while. So great intraday pattern there. So what time is it? Dan is here. Take it away.
Yeah. Good morning, folks. All righty, broadcasting from beautiful sunny Tavernier in the Keys with my Yeti mic, ready to roll. All right, I went through all opens yesterday. We are doing well. So here's Facebook up a little bit, but we have the 187.5s, and I tightened the stop to today's Tuesday, so over Friday's high, we're fine there. Tesla, relative weakness. We have a call spread way the heck up here over 227.5. And this is a beautiful 1, 2, 3 for an add, both directionally. Your Yeti mic, that's a good one, trader. You know what, when we're gonna make an MT live called, teaching children how to trade. And that's kind of how I'm going to start. I'm going to talk about the stock market, what they are, and then have people identify with companies and products that they know, like Yeti and Apple and Walmart and Urban Outfitters, whatever kids relate to. And then we go show them what a stock is. Then we get into our trends and, like we're talking to an 8-year-old. And that's going to be a great course. I can already envision it. I just need some help to put it together. All right. AAL, we're short the stock as a little bear flag breakdown here. Daily, weekly, monthly is all in agreement. AEM, I'll just go alphabetical here. AEM, gold stock we added yesterday. Cato was a beautiful, we got into this on Friday and we said you could have added yesterday as a 1, 2, 3. I know some of you did. CNC, we're short stock. Campbell Soup, we have a covered call. Crust, covered call. EDU, put spread. Ego, another gold stock we picked up yesterday, looks great. FLT, we have a way out of the money put spread. GNRC, long stock. Millennium put spread. Goose, short stock. RNG put spread, looks great. PVG. We're long, well, actually, we're long calls on this pullback yesterday morning. And it needs to hold right here or else a deeper retracement is not good. SRC, we're long stock. And it's, you know, look, it's kind of a rectangle consolidation in the upper half here. We got a bullish weekly, monthly, that looks good. And finally, WDC, a put spread way under here. So all of our opens are fine. Gustav is asking about CGC. It's, you know, you got a little gap here to resistance. Maybe 30-minute high would be a day trade, but you're swimming upstream. I'd much rather have that same 15-minute chart, but with a better daily. This thing's gapping down, so relative weakness, DSLV. Just, you know, grinding lower there. J&J, I just saw, oh, it was a joke about a brand. Oh, got it. Yep, see, I had the timing off, but you're right. Put a picture of a little marijuana stick there, but I don't think the parents would like that analogy. J&J, I just saw in the headlines on CNBC that they're, you know, the judge ordered them to pay over $500 million on the opioid thing. So why is it gapping up? Anyone? Why is J&J gapping up on a $500 million fine?
Was a drop in the bucket.
You got it. The answer is the market expected a worse news. Absolutely, folks. Devanos, welcome. If you can also put your drop down to all panelists and attendees. So that way, when you're making fun of Gustavo, he'll be able to defend himself. All right, pizza, I just saw on the ticker going by. 4670. Hey, that's a 30-minute high candidate. It's gapping to the top of this range. So there's absolutely nothing to do with the open, but if for 30 minutes, if it can churn on the 15-minute chart, then target, you know, $49.50. I see beyond here. Remember yesterday I was considering a put spread. Now it's gapping up again. 159.60, these prior highs. Let's put this to a 60. See, it's at this one, but if you can get a put spread for Friday, the 145s, then that would be fine. a little come on, data. Oh no, this wasn't the one, but still a nice little gap up. Penny stock toy, looks like a pump and dumper. Here's the one I saw ripping on the 15. Look at this. This is your EKG, big old mess, but something, pump and dumper, whatever the case, a gap breakout. This thing might go to 450, 550. I wouldn't chase it here, but if that's your style of trading those little small penny stocks, that one might give you a setup. Dollar Tree, Greg mentioned as a possible short. I gave this pre-market a half lot. Remember, I did the same thing. We went core long on this. On this gap up day, I did the same thing. I said, let's buy a half lot pre-market. We had a nice open gain. And then I trailed, once it had this big gap up, I moved the stop to under this green bar's low. And we trail stopped out at a small profit. This was earnings. And now this is a bull flag. Here's my flagpole. There's my angle. And now it's gapping up. So we'll do it again. It's given us a new setup. It's kind of just stagnant here pre-market. So I have a feeling that it should come in a little bit to give us a better add. This MDB I had as a call spread candidate if it broke down under this bar, which it did not, obviously. Now it's a gap breakout. So guess what? Now it is a put spread candidate. And it had really big juice over the weekend. Philip Morris confirms discussions with Altria. Wow, regarding a possible merger? Wow, I didn't think I would ever hear that news. Look at it ripping. Wow, mighty. You know what? That must be that would be like Coke and Pepsi merging. That is shocking news to me. I wonder if that's a sign of weakness by looking at, look at their monthly charts. Well, they've been on a tear, but look at this wonderful short setup right here. Lower low, lower high, topping tail. That's your core short. All right, let's continue. CNQ is a short under Friday's low. Shop. Yeah, no, it's to me, it's just a sign of, possible business struggles in the industry. Shop, I know this is a favorite of McGraw's. It's gapping up. I just don't like doing these when they're far from the 20, but it's strong. Billy is a big mess, got no interest in you. BMO had earnings, Bank of Montreal, Bank of Nova Scotia, 5180. It's kind of trades like an ADR, but put spread idea, McGraw, 30-minute high on BNS. At cost, I don't know if you're talking about the stock or mentioning something else. Yeah, we have this. This was one I mentioned yesterday that people were probably shaking their head like, why on earth are you giving me a long after the market tanked on Friday? And the answer was because it's a bullish daily, weekly, monthly, and it will be red bar ignored if it triggers over that. And Starbucks is another one. Look at that retracement yesterday. 75% of Friday's bar. This is a long over Friday's high. This looks great. Let's see if we can get a put spread plus a directional. I'll put them in this little 15-minute window. SXI, 65 bucks. And there you go. That's a nice gapper. I'm going to put that in this window. Baidu's not really a gapper, but it's a pullback. You know, this big bar, there should be some support on a smaller time frame, and we're getting our reversal. So over Friday's high, McGraw, this is a put spread candidate. Baba, I looked at this one also, and this one came down harder, and I don't have as good of daily reversal, but I do like the 15-minute for a day trade, because you got this tight trading range yesterday, and your target would be, you know, 169, 170. So I like it for a day trade, but for a put spread, I like this setup better. Do you all see the reasons? It's because of the reversal is better. All right, makes sense. Cal 1789, the gap's too big. Jill, it's a big old mess. You're gone. Oh, Philip Morris. I meant to look at the other one. Let's see. Do you see how instantly the market, the collective market participants analyze the financial effect of this potential merger? I wouldn't have been able to do that, and it happened instantly. It's bad news for PM, and it was good news for Mighty Mo. But the market made that determination. And that's why we say we're just swimming with the whale, and let the whale decide where he wants to swim. And we're just going to take a little ride with him. I don't like the spottiness and volume of that. Plan had earnings. 30-minute low is a call spread candidate. RGS. Still extended from the 20, but you can short a bounce. We were actually in this, had earnings, so we had to bail, and you know, that's an ugly gap. AMWD, it's a mess. BNet, penny stock, Echo Victor.